why I really kind of pulled back and kind of really was a little cautious going into September of 2020, because the S&P 500 and the Qs had this setup here where you had the price action way outside this upper weekly Bollinger Band. So another feature indicator, whatever you want to call it on the platform, I love to use is the anchored volume by price. So that's essentially being able to measure the volume distribution from a specific point in time. So this is kind of using that anchored VWAP type of approach, but using the volume by price instead of the VWAP. So shout out to Brian Shannon for really teaching me that whole process of anchoring and where to anchor and why you're anchoring at certain points. You generally want to anchor at reversal points. So in this case, for Amazon back in March of 2021, that was our really big reversal point. That was a status quo change. That's when we hit a low and we continued to hit higher lows from there. So not only do we have the price action outside of this Bollinger Band, we also have this volume gap that's being created by the anchored volume by price. And what is a volume gap? It's essentially an area where you don't have a lot of these volume nodes highlighting where volume is being distributed. So you can see here up here, there is quite a bit of volume shown by these volume nodes. But then you can see this highlighted orange area, there's not a lot of liquidity below. You really don't have a lot of shares that have really aggregated within this price range. And so a lot of the time you'll see the price move very quickly through this, either to the downside or the upside. So to give you guys an example, this is Amazon starting to fill that volume gap. But if you go to something like Tesla, this was an example a couple weeks ago. And the same thing, I'm going to anchor the volume by price from this swing high. And I get a lot of questions a lot of the time, why are you anchoring from these spots? And so the thing that I want to point out here, especially with Tesla, the reason why I am not anchoring the volume by price from this swing low, because if we look here at this price action at 684, 685, we don't know anything about the volume up here, because if we're anchoring the volume by price from the swing low, there hasn't been any price action that has happened up here. So we have no idea what the volume is showing until we go to a higher point, and then we can really see where that volume is aggregated since this swing high. So what I like to do is I like to anchor the VWAP from the swing low, and a lot of the time anchor the volume by price from the swing high. And it really is a function of how many candles have passed. So in this case, sometimes I will anchor the VWAP and the volume by price at the same point. In this case, since we do have that swing high up here and I want to see, what's above, I do want to anchor that volume by price a little higher. So in this case, you can see Tesla had a really great case study on volume gaps filling below last week. So, I like to talk about volume shelves a lot. And a lot of the time, these volume shelves can turn into quote unquote launch pads for price. Now, there's a very simple explanation for when they don't. If you break this volume shelf, then it's no longer going to be a launch pad. You're kind of going into the abyss, into this gap. And so you can see here, Tesla literally went from 680 all the way down to 620 within 3 days because you had this volume gap. And notice what happened as well. We bounce off the next level of volume below. So anytime that you're kind of trying to think of this in a supply and demand perspective, definitely think about it in a sense of who is holding at a profit, who is holding at break even. So when the price drops all the way down to this area highlighted in green, these shares around 620 that were just holding at a pretty decent profit are now back to break even. And so that supply is going to dry up because not as many people have profits that they can sell. And so they're likely not going to add more supply on the market. And sometimes this bounce can even start simply from a supply drying up. So we got that nice bounce last week, and literally the volume gap did the same exact thing to the upside. We literally went straight back up to that break-even supply zone above, and we're calling it break-even supply because imagine that you bought Tesla at 680. We deal with the drawdown to 620. You get back to break even a few days later. You may take some off the table. That adds supply onto the market, and that's how this becomes resistance, as it did earlier this week. So we're back through the volume gap. If I were to kind of use the anchored VWAP and the volume by price together, the level below I would be watching would be kind of the same thing, 625 to 630, and we'll just have to see if that plays out. So anchored volume by price, multi-time frame analysis, anchored VWAPs. These are all things I really like to use. AMC is another great example of a few different things that I like to use on the platform. One, I really like to look at the anchored volume by price and the anchored VWAP from the start of a trend. So you can literally say, in this case, if I'm starting the volume by price and the VWAP from the swing low, I could say the volume weighted average price for this uptrend is, in this case, $23, because we're starting the volume by price from the start of the trend. So we can literally say this is the volume weighted average price of this uptrend. And so a lot of the time I like to use the VWAP in conjunction with trend lines, in conjunction with these volume shelves below. If AMC did get all the way down to 23 and it started to break down, this area below, very similar to what we just saw in Tesla, would be, an area of interest for price to possibly bounce. That would be around 14 or 15 bucks. I'm sure, some people aren't too happy about that. I'm just looking at the chart. I have no interest. I'm not shorting Tesla. Shorting AMC. I don't have puts on AMC. I'm just looking at the chart with an unbiased eye using these volume weighted things. Now, I don't want to take too much more time because I want to respect everyone else's presentation time. Dan, I'm going to ask if you can touch on the raindrop charts because I'm not going to get to those. But one other thing that I really wanted to touch on is the seasonality. Seasonality is something that I really like to use a lot. And it's nice because you can look at the seasonality on multiple different time frames. So this is something that I find really interesting on IWM going into tomorrow. So you've got this daily chart. You can see here that we did have a little bit of a breakdown through this support line, but we did bounce above it to close. And you can see we did bounce off of it quite a few times over the last couple months. And so not only are we at support, but if you go to the seasonality, something really interesting comes up. So we're looking at each day of the week and what is the win rate since the start of 2021. And you'll see here that these percentages are simply just the ability to see what is that win rate. So a 69% win rate for Friday means that 69% of the time so far in 2021, Friday has closed higher than Thursday. So 69% does not tell you there's a 69% probability that Friday is going to close green. It's telling you, historically speaking, so far in 2021, Friday has closed higher than Thursday 69% of the time, which is definitely the strongest day of the week. The other one is Monday with a 54% win rate. So Friday not only has the seasonality, but we're also at this technical level, which we may get a bounce. So I really love to use technicals and seasonality together. So that's something that I really wanted to point out as well, that, Trendspider does offer things that are also non-technical. It's not just a technical platform. We have a lot of other things. We have analyst estimates, we have seasonality, we have insider trading data. So don't look at Trendspider as just a charting platform. It's much more than that. We have back testing, scanning, pretty much everything you can think of except the ability to trade on the platform, which will be coming in the future. So that's all the time I think I have. I want to be respectful of everybody else's time. And if you guys have any questions about what I talked about, shoot them in the chat and I'm happy to answer them. And I'll hand it back over to you, Gav.
Awesome. Thank you so much, Jake. And yeah, like Jake just said, I'm going to ask a couple questions in from here, but I'm sure if you drop things in the chat and you're just like, oh, hey, Jake, he can definitely, put it in as a text throughout. Also, I totally forgot to start recording at the beginning. You probably heard the recording sound. I started a few minutes in, so I think I caught most of it, which was some really good stuff. All right, Jake. Yeah, just a couple of questions I'll throw at you, and then we'll keep it rolling. So the first one was more of like an overall question, and that was from someone saying they still felt like this was a very, I think you broke it down pretty well, but they felt like it was a pretty high level presentation with some of the things that you were using. Is there a place people can go to find very simplistic training for Trendspider?
So training in regards to how to use Trendspider, we have a few different ways to get involved. So we have one-on-one demos. So we have a customer success team that will actually walk you through the platform. I would definitely highly recommend getting those questions kind of written down before so you can utilize that 1 hour with the customer success team as much as you can. So that's one way, the one-on-one demo. You can ask anything about the platform. We also have Trendspider University. We're about to be launching a brand new series of videos. Zach, who's our director of customer success, did the last university videos. I just got done doing an updated video with all the new features and all of that. So that will be coming very soon, and that will be very updated to what we have on the platform now. Now, if you want to learn kind of more of the technical side and kind of the explanations of this, rather than just the user kind of usability, is that a word? You can go to the Trendspider Technical Analysis series, and that's a YouTube series that I created with the marketing team, who really did a great job producing that, going over a lot of these kind of commonly asked questions. Where do you anchor the VWAP? Where do you anchor the volume by price? How do I add the volume by price on the chart? And so that is the technical analysis series on YouTube. And you can just check that out by just typing in Trendspider Technical Analysis series, and it'll be the first thing that pops up.
Perfect. And also, again, for everybody, this is all being recorded from the point where I started recording, and I will upload that to the Wolf YouTube. I'm sure Trendspider will put it up some places too. I'll make sure that they have access to it. And I put in the chat a link to the Wolf YouTube as well as to my Twitter. And I will as well post it to the Twitter, of course, once it is up, and I'll tag all these guys. And the other question that I'll throw over to you before we move on, because it's one that, I think a lot of people would love to hear your thoughts on, is what is a raindrop and how can I use it?
So I will let Dan explain what a raindrop is, because I kind of went off. I'll go on a tangent. We'll be here for like 3 hours. But a raindrop is just a volume weighted chart, volume weighted candle. So a lot of people will look at a daily candle and they'll look at the volume bar, but you can only get so much information on looking at a candle and the volume bar below it. It will only tell you how much volume occurred for that day. The raindrop is telling you where that volume occurred. And a lot of the time it will tell you a lot about the supply and demand of that day and how the market was, how aggressive the market was on the buy or the sell side. So if we have time, I'll definitely go over a demonstration on how to use it, but I like to use them to get an idea around breakouts and breakdowns if there's volume backing that breakout. And that is really shown by a kind of a bulge at the top of the range. So anytime you have a raindrop with a lot of volume at the top of the range, you can assume that buyers were relatively aggressive, because if buyers weren't there to absorb that supply on the market, you wouldn't have volume or a volume profile taking place at the top of the range, because those buyers, the price would have to drop in order to find those buyers. So we know anytime you have a bulge of volume at the top of the range, there was conviction by buyers willing to absorb whatever supply was being dumped on the market. And so I'm sure Dan will go over it a little more, but it's just probably one of the most powerful tools that I've been able to use to really visualize supply and demand in a completely different way.
Perfect answer. Thank you for bringing that out. And I'm sure Dan will hit on it. Okay, we are going to keep it moving. But if Jake, you're up open to answering questions in the chat as people put them in there.
Yeah, absolutely.
Okay, awesome. So I'll say, I have a lot of questions that came in here. We're not going to be able to get to all of these. There's just so much going on. But if it's something that doesn't need live charting and could just be like a question, feel free to go ahead, drop that in the chat. Just make sure you're putting it to everybody so that everyone can see it. And we are going to keep rolling. StockChartArt, floor is yours.
All right. So let me share my screen. All right. Could you guys see my screen clearly?
Yep.
All right. Beautiful. All right. So first off, I just want to thank you for putting this together and having me on. Jake quickly touched on the trip that you and Jonah put together down in Orlando, and that's definitely something that I'm looking forward to be able to meet everybody in FinTwit in person. I think it's definitely going to be a memorable experience, and it's something I'm looking forward to. So what I kind of wanted to do with the time that I have allotted is I wanted to dig into my process that I use in order to find the setups that I'm looking for. And it's sort of a two-step process. All my charting and my technical analysis is strictly done through Trendspider. But the way that I find the stocks that I'm looking for is through MarketSmith. And what I'm looking for is particular things in the fundamentals, such as the RS rating of the stock, the composite rating of the stock, the accumulation distribution rating of the stock. I'm looking at the sales from quarter to quarter. I'm looking at the EPS from quarter to quarter. Same thing, I'm looking for the sales from year to year. I'm looking at the EPS year to year. And basically what I'm doing is I'm looking for the strongest stocks from the strongest sectors and the strongest industries at that particular time. MarketSmith has a great list of screens already built in. And I sort of have put together a favorite list of my screens that I use. Some of them are the accelerating leaders, the top rated stocks. Every single day, I'm looking at the stocks that are making new relative strength line highs. And relative strength is different than RSI. I'm looking at the technical strength screens, the fundamental screens, and every single day after hours, after market, I'm looking through these screens and I'm looking for specific consolidation patterns. Whether they're flat bases, cup setups, falling wedges, cup and handles. But I'm looking for a specific consolidation pattern. I'm looking for a stock that's consolidating. And then what I do is I take those stocks and I put them on a list on Trendspider. So I usually have about 2 to 3 different lists that I'm watching at a particular time. I have my tier 1 stocks, my tier 2, and my tier 3. I kind of separate them to which setups that I think are the best based off of the fundamentals and the technicals at that particular time. And then what I just do is I just watch those stocks. And it's, trading is very difficult, but it's very simple at the same time. And what I'm looking for over and over again in the market is I'm looking for a consolidation period. And then I'm looking for a breakout from that consolidation on high volume. And it's basically wash, rinse, repeat. The market has been very tricky the last 3 to 4 months. I'm a hybrid trader, swing and position. Swing is more short term. I'm looking to get into a stock and exit the stock fully within a couple of weeks to a few months. Position trading, I'm looking to be in a stock for a longer period of time, and I'm looking to ride out the entire trend and the entire move as much as I can. So just to give you guys an example of kind of what I look for, I want to go over some of my more successful trades throughout the year. So I'm going to go into Roblox, for example. This was a very popular stock, IPO stock. A lot of people had their eyes on this one. Post IPO, the base formed a very nice double bottom consolidation pattern. You could see over here, the stock broke out on May 21st, but you could also see the volume on this particular breakout. You don't just want to get into a stock because it's breaking out. You want to get into a stock because it's breaking out on high volume. And there's always a difference. So if you look at, my general rule is that I use MarketSmith, and it tells you the volume run rate compared to the 50-day moving average of the volume of that particular stock. I know some people don't have MarketSmith, but I just find that useful because you're able to see the volume run rate at that particular time. But as a general rule, I'm looking for a volume that's greater than the volume of the last 10 trading days. So for Roblox, you could see the volume on the day of the breakout is greater than any of the 10 prior trading days. It's actually on this particular breakout. it would have been the highest daily volume to date at that particular time. So I got into the stock. I sold about half of my shares up over here, and then I sold the other half up over here around somewhere. It's been a very tricky market. You can look at Roblox, for example. The stock has basically round tripped from where the stock initially broke out of its post-IPO base. So it's a very tricky market because a lot of stocks, the breakouts are failing. The stocks look good, the stocks look strong, and then before you know it, the stock is back where it was a month ago, where it broke out. So in this particular market environment, you have to move very quickly. You have to be on your toes. You have to be able to adapt. And the strategies that's been working for me is I've been taking profit a lot quicker than I usually do, like in 2020, for example, where I'm really able to position trade and let my winners run, whether that's for 6 months, 9 months, a year, as long as the trend stays intact and the stock is riding its moving average, I'm going to stay in the stock. So, one of the things that you have to learn as a trader, once you're in a position and once you have a decent cushion in that stock, is you have to learn the personality and the characteristic of that particular stock. How does that stock interact and engage with the moving averages? Does it ride the 21 EMA? Does it ride the 8 EMA? Every stock is different, but when you study charts and you study the technicals of a particular stock, your eyes become easily trained to be able to understand how the stock interacts with the moving averages. So that's something that you always want to keep an eye on. If you're in a stock and it rides the 21 EMA, the whole trend up, and then it breaks through the 21 EMA and closes below it on high volume, that should be a warning sign. But what I do once I'm in a stock is I really use the weekly chart to determine whether I stay in a position or I close it, and whether it stays above the 21 and the 50, it depends on that particular stock. But, another example of one of my successful trades in the last couple of months was Upstart, another big favorite. I know Jonah Lupton absolutely loves the stock. I know that he's still in it, but I'm not an investor. I'm a swing trader and a position trader. So for this particular stock, it formed a nice falling wedge pattern. On May 17th, we broke out on good volume. As you can see, the prior volume was very small in the month of April. So the volume that we got on the breakout was sufficient enough for me to have conviction to get into the stock. And then for this one, same thing. I like to sell my positions off in increments. Usually I'll sell either 25%, another 25%, and then the other 50%. It depends on the stock. It depends on the situation. Sometimes I'll do 50-50. It all depends on the market at that particular time. But for this particular stock, it was a shorter trade. I sold them to strength on the way up. And then the last little quarter that I had left in the stock, I sold when we had cut through the 8 EMA over here on pretty high volume. I was watching the stock over here as it consolidated in this flat base pattern. It's now just kind of breaking out, and it has broken through the volume shelf as well. So it's definitely a caution sign. So it was something I was watching, but it's it's still on my watch list. It's still on my radar, but let me go into, I know a lot of people were, asking about Amazon, for example.
Hey, James, real quick on Upstart right there. So based on what you were showing where it broke through, would you sell currently if you were holding a position? Would you sell currently?
If I was still holding a position?
Yeah. Asking for.
I mean, it depends, it truly depends on your risk tolerance and the type of trader that you are and how long that you're planning on holding the stock. But, the fact that it's breaking out of this flat base and that it's breaking through this volume shelf over here, I would definitely be cautious. I don't like to tell people what they should do, but we did close in the upper half of the range and we did form a hammer today. So, possibly tomorrow we come back into the flat base, but the overall weakness that I'm seeing in the market and that I'm seeing in technology, it has me in a more defensive stance. And I'm not really looking to put my foot on the gas at this particular time in the market.
Awesome.
If that answers your question at all.
Yeah, thank you.
And just to give everyone my general overview of the market right now. So FFTY, the Innovator IBD 50 ETF, it tracks the IBD 50, and this is always an ETF that I keep an eye on as it correlates to a lot of the growth stocks that I trade, and also ARK-K, Kathy Wood's ETF. So we broke through the 50, we broke through the 21, we broke through the 8. We even broke through the 200 SMA. The last time that we broke through the 200 SMA was during the COVID bear market, even though it was short-lived. And from the point that it cracked through the 200 SMA, price fell down another 33%. So it cracked through the 200 SMA over here back in June, but it was for one day, and the next day we had a bullish engulfing candle that pushed price right back above the 200 SMA. So the fact that we're breaking below the 200 SMA, there's definitely warning signs going off. So that's one of the reasons that I'm being more defensive right now in the market. You need to know when to be defensive and when to put your foot on the gas. Not every day is a buying opportunity. Not every week is a buying opportunity. Not every month is a buying opportunity. What I want to do as a trader is I want to have the wind to my back, and I want to have the cards stacked against the market as much as I possibly can. And then I just wanted to pull up ARK for a second too. ARK, we had a nice little move off of the low at around $98. We've rallied up from the lows, I believe, around 30%. But then, we broke right back down through the 8 AMA, through the 21 EMA. We cracked through the 200. We cracked through this volume shelf. The 50 simple moving average is holding price for now, but that's not exactly the strength that I want to see when I'm looking to add on to exposure. So, just to give a basic breakdown of my trading process, I use MarketSmith as a screen to look for strong stocks fundamentally. I take those stocks, I put them on watch lists on Trendspider to monitor them. And then I'm looking for basically the same thing over and over. I'm looking for a breakout out of a base, out of a consolidation period on high volume. And I'm looking to wash, rinse, repeat that process over and over again. Obviously, I also use alternative entries, price bounces off of key moving averages, candlestick reversals. Maybe I could get into that another time. But the basic gist of what I'm looking for is I'm looking for a high volume breakout out of a consolidation period, out of a base. And I'm looking to just, do that over and over again. And I hope that I was able to, give a little bit of insight into my process and into, basically just my my thought process on a day-to-day. And if anybody has any questions, maybe one or two questions, I would be happy to answer them.
Awesome. Well, thank you for running through that. Definitely, we have some questions. And for anybody that's seen, Jake went ahead and he answered a lot of these questions. And I believe I have answered questions set so that anybody can view them. And he even dropped a little Easter egg in one of his answers. So I would recommend checking out those answers because there's something fun in there. Besides that, let's look at a couple of these. All right. Two good questions that came in. So one of them is talking about, we're sounding negative about the market turning south, but if you trade properly, you can make money on both bullish and bearish setups. Do you enter short positions? Is that something that you do? And if so, how do you structure and look for entering a short position? Because you kind of just showed for a lot of bullish positions.
Yeah, absolutely. So I don't short positions. I don't trade options. Every now and then I might trade an inverse ETF, whether it's the SPYs, the Qs, the IWM, if I see a proper setup at that particular time. But 90% of my trades, I'm looking to go long, and that's just what works for me. That's where I feel comfortable. I know a lot of people like to trade short and trade long. I'm just a swing trader, position trader, and I like to get into a trend and ride it out as long as possible, and that's what works for me at the end of the day.
Absolutely. Yeah, respect that. And then the one other question that I'll ask, which was pretty good, and maybe you weren't meaning to do it like this, but perhaps you were, is that it seems like there are certain charts that people use as bases for the market overall. So for example, here you were using ARKK, and that's kind of something that people might use as a base for tech. And they were explaining that they use IWM, QQQ, and SPY. Are there any others, or perhaps do you even use certain charts as bases for areas of the market? And if so, what would those be?
Yeah, absolutely. That's a great question. So I found for me personally, a lot of the stocks that I trade, I do trade a lot of like small to mid cap technology names. So I do track the IWM. I do track the IWO. I would say RK, FFTY, the IBD top 50. I find a lot of the stocks that I trade happen to be IBD top 50 stocks, and it's not necessarily because they're on the list. It's just the process that I use to identify stocks that I want to trade, happen to be the same stocks that are on the list. So it's just certain things that I'm looking for. But, basically RK, FFTY, IWO, IWM, obviously I track the SPY, and I track the triple Qs, but, I'm not necessarily, I just want to emphasize too that I'm not overly bearish at this particular time, but, if you look at the market breadth for this particular rally, let me just pull up the Qs for a second. This is just something that I wanted to kind of touch on. So at this particular point, when we moved off of the lows from COVID, for this particular rally all the way up before we consolidated over here, market breadth was expanding this entire time. The market breadth was going up. Same thing over here. Once we broke out of this consolidation period, market breadth was expanding. Out of this particular breakout and off of the lows over here, the market breadth has been deteriorating the last few months, and that's always a warning sign for me, as the indices such as the S&P and the NASDAQ are making new highs. Market breadth is continually deteriorating. So there's certain things that I look at, and I just, as I mentioned before, I want to have the stacks, the cards stacked in my favor as much as possible. And just at this particular time in the market, I don't have big exposure. The only position that I'm holding right now is GNRC. I closed my Amazon position earlier. I had gotten into that, the same way a lot of people did on this particular breakout out of the space. So, I'm not saying that the market is, that we're going to go down, that we're going to crash, that I'm, that the biggest bear out there. It's just at this particular time in the market, I don't feel that it's a good time to have my foot on the gas, and I'm kind of just gonna wait back, and I'm gonna see where price goes, and I'm gonna react to it.
Yeah, that's fair. For those who are unfamiliar with market breadth, can you just explain that real quick?
Yeah, absolutely. So, the market breadth, there's a lot of deviations of market breadth, but a lot of the time what it does is it tracks stocks that are over certain moving averages and stocks that are making new highs as opposed to making new lows at that particular time. So it's basically like how many stocks are participating in a given move in an index or a stock exchange. So an index may be rising, yet more than like half the stocks in the index are falling because a small number of stocks have such large gains that they drag the whole index higher. So a lot of the times, you want to track how many stocks are above the 50 simple moving average, or you could look above the 200 simple moving average, and the stocks that are making new highs as opposed to the stocks that are making new lows. So when when the market, has strong breadths, you'll see over the course of the month, that the stocks are continuously making new highs. So say like at the beginning of the month, just for example, 50 stocks are making new highs, but at the end of the month, there's 100 stocks making new highs. You can see that the market breadth is getting stronger. But what it's been doing for the past several months is it's been weakening. So the stocks that are making new highs are less and less, and the stocks that are making new lows are more and more.
Got it. Appreciate that explanation. James, I know you got to get going. Is there anything else you'd like to share with everybody today?
No, that's it, man. I just want to truly thank you for having me on. Jake is definitely somebody that I look up to. Same thing with Dan. I consider them both friends. They're both absolutely amazing people in the FinTwit community, and I'm definitely lucky to be able to have a personal relationship with both of them. Same thing with Jonah, and I'm just looking forward to hearing what Jonah and Dan have to say. So that is it.
Yeah, thanks, man. I appreciate that. Right back at you.
Thank you. Awesome. Well, it was great having you on, and I'm glad this was recorded, so we'll be able to share this out and a lot more people to see it. So it's great having you as always, and we'll do this again soon. All right, Jonah Lupton, welcome to the call.
Do you need me to turn on video?
It's whatever you're comfortable with.
I guess, are we doing screen sharing?
Yeah, we'll be doing screen sharing.
Okay.
Yeah, so if anybody's unfamiliar with Jonah, shame on you. You should go check out his Twitter at Jonah Lupton. And
can you see my screen?
Yeah, it's all screen shared. So yeah, floor is yours, Jonah.
Okay. I guess I'm kind of giving away what my next Substack deep dive write-up is going to be on, if you can see my screen right now. Top left, SoFi. I'm just digging into Galileo. So I'll look at the chart on SoFi, actually, since that's my next Substack write-up. Since the markets are closed, I guess it doesn't matter right now to kind of give it away. But so I mean, if no one's kind of familiar with my style, so I am a long-term fundamental investor in growth companies for the most part. I typically hold anywhere from 20 to 30 companies in my portfolio. When the markets get kind of chaotic and volatile, I'll typically consolidate into my favorite 15, 20 names. That's sort of what I've been doing over the last few days. Obviously, volatility has picked up. Small caps have continued to sell off. I started to get a little worried today. I think many did, about the IWM and the IWO. I don't know if you guys, I literally just jumped on to Zoom, so I'm not sure if you guys have already shown this. I'm guessing you probably already have, but let's do IWM first. So, IWM looked pretty good in the morning because we did hold this kind of 216 level, bounced off it this morning. And then I think maybe around 1:30, 2 o'clock, we started dropping, fell through there. I got kind of nervous, started selling off a few of my stocks, my lower conviction names, and I'll show you in a second which stock I sold today. And then IWO kind of did the same thing. What time was that? Actually, I'd have to change the time. But anyways, I think it was around 1:30, 2 o'clock. So I started to kind of panic. I was afraid this would create some massive selling from the algos, thinking that we would turn into a big bloody red day. So I wanted to cut a few of my losses. So I trimmed a few of my positions. One stock I did sell today was Ozone, Russian e-commerce company. So I was looking for a bounce here, to stay in this wedge. And once Ozone dropped below there, I let it go. So, kind of how I do things, I would say 2/3 of my portfolio is higher conviction, longer term positions, where I'm typically not doing something like this. I'm typically not selling out of a name just because support is broken. I'm typically going to add on those pullbacks and dips because it's a longer position, a longer term position. Maybe I have a low cost basis or I have a big unrealized gain. I don't want to take that gain if it's really a long-term position like Upstart, like Futu, like Celsius, etc. So even though a few of those names have traded like crap the last week or two, I'm not about to ditch them because then there's also the, like a lot of my growth names, have pretty large catalysts that could come along at any time. For instance, if you're in Amazon or Google or Facebook or any of the big FANG stocks, there's really no catalyst that can move the stock more than 3 or 4% in a day. Anything above that would be pretty extraordinary. Once you get into the small and mid cap stocks, there are catalysts that could easily move a stock 5 or 10% a day. And I would say, a third of my stocks, if some of the catalysts that I'm waiting for come true or come through, those stocks can move 25, 30% in a day, literally, like DermTech. If Cigna comes out and gives DermTech, like reimbursement coverage on their PLA patch, DermTech can move 25, 30% in a day. So it's just one of those names, even if it's trading like crap in the short term, I'm not gonna abandon a name like DermTech and then miss a monster rally because of a big catalyst. So, like looking at DermTech right here, you kind of look at these, like I'm looking at support right here at, call it 32.78, give or take. If it actually dropped below 32.78 tomorrow, even though I have this support line there, I just don't think I'm going to sell it because God forbid, on Monday we come in and we get an announcement from Cigna and DermTech's trading at $40 and then I'm chasing it higher. So it really depends on what kind of a stock it is and what my conviction level is. So some of the names I've sold recently out of my portfolio that I still like long-term, but I just don't have enough conviction in them right now. Sentiment's obviously pretty bad around some of these names. And I had some short-term profits and I wanted to protect those profits. So, one of the names is Redfin. So, I had this trend line here. I didn't sell it here. So that was on July 8th. But then, when we failed this breakout and then came back down through, what should have been at that point support, that's when I got out of Redfin right around like 61. And it's obviously continued to fall here. So, if I do like this name long-term and I have some cash in my account, which I do right now, maybe this is now a support that I should be paying attention to on Redfin, somewhere around 51.50. So, let's say we get down to 51.50 in the next 3-4 sessions. This would be a name that I'm looking to probably add back into my portfolio. Another name that I recently sold out in the last few days is Grow Generation. So, this was one of 2 wheat stocks that I had in my portfolio. When we broke this line here, so right around, $43 or a little bit lower, probably 42.50. I had a stop loss, a trailing stop loss. So I was out of Grow. Now, I'm still kicking myself for not selling it up here around 52, 53, but, at least I got out at right here instead of, down here. Now, I know it's only, $3 here, $3 there, but it all adds up over time. So, now we kind of have this support line coming down here. Let's see if Grow can bounce off of that. And, but then you have this line here might be serving as resistance on the way back up. So it's just hard to know where the stock might trade. So, this is not a high conviction position for me. It was not a core holding. It's in that bottom third of my portfolio where I'm trading these stocks more on technicals than fundamentals. Now, let's say it bounces here. I take a position, it blows through resistance, then I might hang on to this stock for a while. But, these are the types of stocks that I'm not willing to lose a significant amount of money on in the short term or long term versus like an Upstart, a Celsius, those things pull back. I got no problem adding on the dips because they're still my highest conviction names. Real quick before we wrap up, a couple of the stocks I did actually start positions in today. So I've been in skin on and off for the last month and a half. It's a beauty care company, kind of a post-pandemic winner, in my opinion. Small cap stock, recently came public via SPAC. So when we failed the breakout here, I sold the stock. So I sold skin somewhere around, I think 1950 maybe, when we failed the breakout. And then I actually bought it back today when we started to bounce off of this support line. The other one that I got into today was PGNY. So kind of same thing. I've been watching this stock kind of, bounce around and rally for the last 6 months. You have this pretty substantial trend line going back pretty far. When's this? So October of last year. That's a pretty solid trend line. So as soon as we bounced off that today, right around 54.70, I think, when we started to bounce higher, I took a position in Progeny. I can't even pronounce it. Now, this is not a core position. This will never be a core position. I do like the company. The fundamentals are strong. I do see some nice tailwinds, but, I refuse to lose money on a stock like this, or at least a lot of money. So, I would have a trailing stop loss, probably 2 or 3% below this trend line. So if it breaks down tomorrow, I'm out of the stock. So maybe my downside risk on something like this is 2 or 3%, and then if it takes off and rallies, I'll hold on to as long as I need to. Another stock I started a position in today, which I've owned, on and off for the last 6 to 9 months, is Shockwave. So they already provided guidance a couple months ago that revenue growth this year will be somewhere around 195%. Valuation's a little steep. It got up to about 203 here. So it's pulled back, 20% give or take. This should be a pretty significant support line here. So I started a position today right around 162, kind of not knowing if we would get back to the, pull all the way down to this support line here or not. And it's obviously never an exact science, sometimes you just get lucky, but, so this is a stock that I started position in 162. I set up limit orders every 50 cents going down to about 157.50, I think, or 158, with a stop loss right around 154.50, I think, right in here. So, once again, this is a name that I do like long-term. I do have some conviction in the name, and I want to have it in my portfolio, but I'm not willing to, try to catch a falling knife. So, this is where I'll take a position near a trend line. If we bounce, great, I'll start adding to it. If we break through, I'm out with, a 2 or 3% loss. So, that's kind of how I'm trying to navigate this market, especially with small caps just, acting batshit crazy on a daily basis. You have, I think I've heard other people say, you have the broad indices, the big cap tech stocks near all-time highs. And meanwhile, under the surface, you have all of these smaller companies, these small and mid caps that are, 20, 30% off their recent highs. Two other stocks that I still like, and they've been kind of beating me up is, Danimer Scientific. This stock got up to 30 just a few weeks ago. It's already pulled back about 30%. Another one is STEM. Same thing, rallied off this low here in May, got up to 38, and now it's pulled back about 30%. I mean, like a legit falling knife. What is that? 8, 9, 10 red days in a row. Some of this price action on these names is just absolutely brutal. I don't know if this is selling. I don't know if it's shorting or a combination of both, but I mean, it's kind of brutal to be in these names that you still like long term. But like I didn't really I added to STEM just a couple times in here, but small ads. Now I think we're on this important support line right around here. So I might, if this thing breaks below, this might be a stock, even though I do like it long term, this might be a stock that I have to get rid of, cut my losses, take the loss, take the unrealized loss, and then maybe hope to get in somewhere, in the mid-teens. Because it's just, at some point, you just have to say adios to a stock because it's just trading so poorly, and then look for a better entry point sometime in the near future.
We've got a lot of questions that came in during that. Mind if I ask a couple?
Yeah.
Okay, the first one was, with these trend lines, are you drawing these yourself? Is this Trendspider software that you're using? And when you go to put trend line in, like what are you looking for?
Yeah, I mean, I just do all these myself. I mean, I am not like a technical expert chartist or anything. I mean, honestly, I love Trendspider. They don't pay me, they don't sponsor me, nothing. But I mean, I am on their software hours and hours and hours a day. When the markets are going up and everything's great and stocks are green, I don't really spend so much time with the charts. Then I'm typically using moving averages more often, and maybe adding when a stock pulls back to a 10-day or 20-day or 50-day. But, when you're going through a period like this, where, you have some big sell-offs, some big pullbacks, and you have stocks just flowing through, all of their moving averages. I mean, you put on moving averages on any of these stocks I just mentioned, and I mean, they're all, you're way below, moving averages. So, at that point, you have to start trying to draw these trend lines and try to figure out where you might find support. I mean, obviously nothing's guaranteed. Like I said, this is not an art or a science. There are probably people out there that are better at it than me. I think I've gotten decent at trying to find, draw these lines, but sometimes you're just kind of making this shit up as you go and hoping that you're right. And sometimes everything, like you could, I'm not saying this is a perfect line, but I mean, sometimes these lines do look like, let's use Upstart, for instance. So, we had this trend line going back to March. Perfect. I think it was Thursday, we came down, we touched it like perfectly, and then blasted higher, came down, and I figured we would do the same thing yesterday, and nope, dropped below it, and then today, blasted lower. And then, you try to start drawing new trend lines, and it's like, then you drop below that. And so sometimes you're just wrong. Sometimes stocks are going to do what they do. The market is just, sometimes you can't figure it out. Sometimes you're just wrong. And, you could spend hours and hours trying to draw the perfect trend lines, and it doesn't help you at all. So it's a guide, it's just one more thing in the toolbox that you can try to use to, be a better investor and perhaps protect profits and limit losses. But no, I mean, so I draw all this stuff myself. I'm not even sure if Trendspider draws trend lines for you. If they do, awesome, but I just prefer to do it myself.
I'm sure Jake and Dan can answer that one.
Yep, we can, and I can touch on that if we have any time at the end, but I'm sure Dan will probably touch on that too.
Cool. So Jonah, I'll throw one or two more at you. And then, if you stick around for afterwards, we'll probably do a Q&A after Dan, but no pressure. And also, I think you can see, to all the panelists, I think you can all access, I believe, these questions. And, Jake already answered a bunch. Maybe, Jake, if you want to go in and answer some more, that would be awesome too. But this one was, Jonah, do you have trading rules for when you usually exit a stock? For example, down 5 to 10% immediately, or off bad news, or usually hold, kind of like. And then they also wanted your thoughts on, I believe, Desktop Metal.
So yeah, I mean, I don't have any hardcore trading rules because I really don't consider myself a trader. You know, like I said, I still think 60-70% of my portfolio is higher conviction, longer term positions like Upstart, Celsius, Dermtech, etc., Desktop Metal, which I'm happy to talk about. And then there's the other third of my portfolio, which is more trading. You know, like right now we're looking at Celsius. So take this for example. So, you know, I mean, there's probably 15 different trend lines you could try to draw from this mess right here. But, you know, I thought I had a trend line kind of set up here. And then, you know, yesterday we dropped below that, you know, instead of getting this, you know, we had to break out actually, was that Monday or Tuesday? I forget. You know, so we had a breakout that failed. I thought maybe the next day we would retest that, you know, that resistance level, maybe break out. Nope. You know, got an absolute, you know, kick in the face drop. I thought maybe we had found some support here off of the 50-day SMA. Nope, fell below that. So, I mean, like, you know, this, yeah, like the last 2 days in Celsius has been really, really frustrating, but I have zero interest in selling this position because I love this stock right now. And based off what I think they're going to do when they report Q2 earnings, there's just no reason for me to get out right now and then try to, you know, hopefully time a better entry. Now, I mean, we still have, you know, I don't think they're reporting Q2 earnings for another 2 or 3 weeks, but, you know, so I would still technically have time to get back into the stock, but I just don't want to play that game. It's just for names like this, it's just not worth it. So no, now, I mean, in terms of, so like I said before, if I'm starting a new position in the stock, especially at what I think might be a support level, yeah, then I'm typically going to set up a stop loss 2 or 3% below that support line, sometimes even tighter than that. So if it goes the other way, I'm out with minimal damage. In terms of Desktop Metal, I mean, I'm not sure exactly what I can say. It's a position I've been in for the last couple months. It's been bleeding red like a lot of other stocks. I mean, so, you know, you go back 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So let's say 12 out of the last 13 sessions, something like that, have been red on Desktop Metal. I mean, if that's not painful, I don't know what is. I mean, none of them are like big drops. It's just kind of painfully grinding lower. You know, whether or not, I don't know if this is going to be some support that takes us down to like 850. I mean, like we've dropped so far already. I mean, I've been in since like 14, although it really became a core position probably when it got under 12. Now it's, I don't know, maybe 8% position in my portfolio with the cost basis around 1125, I think. So 850, yeah, I guess that would suck, but I mean, this is a stock that I plan on owning for the next 3 to 5 years. So whether it bounces from here or drops another 3, 4, 5%, it really doesn't phase me one way or the other. Because this is a stock, like I said, that I'm planning on holding for a while because I do believe in additive manufacturing or 3D printing, whatever you want to call it. And I believe in DM's portfolio, management, IP. You know, they've been doing a lot of acquisitions to continue building out their portfolio of printers and qualified materials. And, you know, I think right now the company's being sold off because they really haven't gotten into their big revenue growth, which will come in the second half of this year when they start shipping their P50 mass production printers. So, you know, we should start to see revenue acceleration in the next 2 or 3 quarters. I think, obviously, I'm looking forward to the Q2 earnings call, see if we get any guidance from Rick, the CEO. I believe he's already said publicly that he thinks they can do about 130 to 140 million this year. You know, let's see if they're still on track for that or not. So it's, you know, yeah, it's trading like garbage. There is no like definitive support that I see. Obviously, we've blown through all the moving averages. It's a SPAC that's trading like crap, like most other SPACs. You know, I feel bad for anyone that bought it around, you know, in the 20s or 30s. Thankfully, that wasn't me. But yeah, I mean, all I'm doing right now is just building my position and lowering my cost basis. And then hopefully in 12 or 18 months, I'll be rewarded for my patience.
Absolutely. And then the last question I'll throw in here now. and then we'll move on to Dan, is I'm looking at some of your indicators on the left. I see a lot of different uses of the volume weighted average price. And then I also see that you have the histogram on the right. Can you just talk about your usage of VWAP as well as the volume histogram?
Yeah, I mean, so I do use most of these. It depends on which stock and which chart and, where it's trading and, which moving average I'm going to be using, obviously. I've been using the VWAPs a little bit more. I thought yesterday with Upstart, we put on that year-to-date VWAP. Where is it? Here you go. Which yesterday I believe was 114.69, and the stock, Upstart was sitting right on that year-to-date anchored VWAP, and I tweeted out, hopefully this is a great buy price, and then boom, today we dropped below it. So it's not science. Like sometimes these indicators, and I mean, I think they're there to help you, but they're not right all the time. I mean, stocks sometimes just act bipolar, and there's nothing you can really do about it except be patient, cut your loss, add. I mean, like, I guess you have choices you can make, but so I am still more of a fundamental guy, but I do think I'm becoming better at using the technicals to help guide me. So, so once again, right, like looking at Upstart, that's why I've been talking more, and I've seen other people on Twitter talking more about, this volume shelf. And, as Upstart was consolidating in here in the 120 range, you had this volume shelf kind of forming around, around the stock. And once we got through here on July 12th, we popped up through that volume shelf. I was hoping that, getting through here would act as a nice catalyst, and that, that the following day, July 13th, would be a nice big green day as we would blow through this, kind of this resistance line, and then get back to the 140s, 150s, whatever. And obviously it didn't do that. This line just continued to act as resistance, and we dropped down to, I think, 108 or 107 today. So who knows, man? I mean, I do my best, and sometimes I'm just wrong.
Very fair. I've been in that boat many times. Thank you, Jonah. That was awesome. There's a lot of questions that came in. Some of them specifically for you, some of them just like thank yous. If if you're sitting here for a few minutes, you can probably click. I think the Q&A panel is open to you, and if you'd like to answer any of them, I think you can type back.
Okay. Q&A.
Cool, awesome, and thank you, Jake, for continuing to do that. And also, I think StockChartArt was doing that. Looks like he may have had to head off, but he was very grateful to be here, and everybody that came. He wanted to really thank you all. Okay, without further ado, the pinnacle of the call, Mr. Dan Ushman, the CEO of Trendspider. The floor is yours.
I'm a pinnacle. That's awesome. Thank you. Thanks for having us, putting us on. Jonah, Jake, James, thanks everybody for being on here. You guys are awesome. It's great to watch and listen. So should I share my screen? Yeah, or
yeah, you'll just need Jonah to unshare.
Oh, okay. All right.
It
says I can't, right? Oh, it's because he's sharing.
Yep.
It's not giving me an option. How do I stop sharing?
I believe if you go down to the, here, let me just
shake your computer aggressively.
I almost punched it today, so.
I do that every day.
Oh, stop. Yeah. I got it. Now you should be able to.
All right, cool. Very cool. So, hi everybody. I'm Dan Ushman, with our CTO Russ and Jake and a whole bunch of other people's help. We built Trendspider, and I'm grateful to be on here and kind of show you guys around how I use the product myself. I've been a trader since 2008, which was an interesting time to get interested in the markets. I've been technical probably for at least the second half of that, right? I don't know exactly when I got into TA, but it's become a way of life for me. which I guess makes sense since I build trading software. This is actually a chart I was looking at while Jonah was talking, right? This is Jake and StockChartArt were both, expressing some kind of concerns about the market. I tend to disagree, right? And this is one of the main reasons why, right? This is the 10-year Treasury chart, right, on a monthly time frame. Traditional scale, not log, right? And I've been watching this forever, right? Ever since things kind of went crazy earlier this year. Right, and you can, the inverse correlation between the 10-year and the stock market, right? So, I've been watching this very closely, and it actually gave me a chance to show, because I was asked to show some of my favorite indicators, one of them, right, which is this RSI with Bollinger Bands thing, right? It's super simple. Not a lot of people use this or even think about it this way, right? It's something that I watch all the time because you see reactions pretty often, right? More often than not when, you have this pop above and then pull back under, right? So I've been watching this here thinking that, there might be some chop right now, but I'm pretty sure things are going to keep going. And part of that's because there's a lot of room on the way down here, right? In this kind of RSI channel, right? Because momentum has volatility too. And this is a really interesting way to measure it. So if you haven't played with that one, that's definitely an indicator that is a little bit under the radar that we have in Trendspider that not a lot of people use. And I use this on charts, but I also use this in scanners sometimes, right? Because it's an interesting thing to scan for. Sorry, was somebody saying something? Thought I heard something. And then like everybody else, I'm a huge fan. I'm a huge fan of using volume profile, right? And one of the ways that I think it can be very, very useful is finding tops, right? Jake alluded to this when he spoke, but this is AYX. I've been watching this for a long time on the monthly chart as well, right? And right as it's topping out up here, you have the large volume shelf forming in the same place, right? On that break of the anchored VWAP, it was very clear and easy to be bearish. You could have actually done that back in February. Right, I have friends who are still in this one, so I watch this pretty closely, right? And there's not a lot of volume here. In fact, if you zoom in, right, you see on the volume shelf again that there's just volume forming, at above where price is trading, right? It continuously forms a shelf and then breaks below it, forms a shelf and breaks below it. So for me, that tells me this one's going to keep kind of crashing down. That's two of my favorite indicators, right? Is the volume profile. One thing that people don't know about it is you can auto anchor it. So this is something that I like to do. It keeps me kind of honest to my my chart, right? Because this way, you're measuring the volume profile from the beginning of the year, right? And you kind of set this up to do it any way you want it. I prefer to use a time-based setting. But you can use anchor to highest high, anchor to lowest low. You can set it up to automatically do this for you. And you can do that with a lot of different indicators, right? You can put an anchored VWAP on your chart, but you can also modify this anchored VWAP and tell the product to anchor it, at a specific place. So you can say the highest high in a range of 200 candles, right? Or something like that, right? And you'll see how it automatically sticks it at the highest high for me, no matter what symbol I switch to. Right, as I keep kind of flipping through charts, it's just going to continuously automatically anchor it for me. So not a lot of people know about that, so I wanted to take a moment and highlight that because that's something that can save you a lot of time. Big C, I wanted to pull up because I'm sure everybody's wondering what stocks I'm looking at. This is one that I've been looking at a lot. And there's a few reasons for it. One is this RSI Bollinger Band thing. Right, it's dipped below that, right, and it's done it on a pullback directly to the anchored VWAP from the most recent low, right, and that pullback also coincides with a large volume shelf, right. I have some drawings over it, but if I zoom in, you can see this is the point of control right here, right, and just below that is the 50% retracement of this move up, right. So like this is one that I'm looking at. I've traded Big C before. And I've done all right on it. I've had a few really horrible trades on it too, though. So I'm kind of been cautiously. I didn't open a position today, I'm thinking about doing it tomorrow, so you guys, you know, can see if I'm right or wrong. But this is one that I've had my eyes on for a little while, and that's kind of why. So let's see. Somebody, I think Jake wanted me to go into raindrops, so I'm going to go into that because raindrops are something that is talked about often, not often well understood. Big C provides a good example for raindrops, so we can, you know, just stay in this chart here. I'm just going to make them a little bit bolder. I'm weird. I don't like bold things in my charts. You know, on Big C here, you can see that instead of price bars or candlesticks, what you're normally used to see, you see these raindrops, right? And they're, for those who don't know, they're similar to a candle in the sense that they have a high and a low, right? Candles have highs and lows too. That's basically where the similarities stop. Raindrops do not have open or close prices. Instead, they take the period of time, in this case a day, divide it in half. So, you know, a US stock trades for 6.5 hours a day. So that's 3.25 hours in the beginning of the day and 3.25 at the end, and splits the volume profile up by that middle marker. So the left side of each raindrop represents the first half of each day, or each period. If you're in an hourly chart, 30 minutes, right? Whatever. And the blob shape around it is the volume profile for that half, right? So if we zoom in a whole bunch on these, you can kind of see that there is a, you know, a volume profile, a shape to them. That tells you where, on a price level basis, the buyers and sellers transacted. The dashes, which is what gives them their color, represent the volume weighted average price for that half of the period, right? So this raindrop is red because the VWAP was higher during the first half of the day than it was during the second half, right? The second half is right on my white line here, right? So that made it red. Normally they'd be green. I make them white because I'm weird again. But you know, this one is green because the right VWAP is higher than the left VWAP, right? So you know, that's how they get their colors and what their shapes mean. It gives you a sense for where the volume was. It gives you a great way to look and see if there was you know, conviction to a move, right? You know, like this sell-off right here on this, put a little arrow there, this red one right here, right, has a lot of conviction because it's like shaped like an upside down balloon. Nobody was buying or selling up here. Like the sellers pushed it down and it stayed down, right? And all day the transacting happened down here, right? This is like a raindrop stem. And we look at these kind of things, right, to confirm or deny breakouts and breakdowns. So if you draw a trend line here, right, this is called a balloon breakdown. It's the opposite of a balloon breakout, right, where you know, that goes up instead of down. But you end up with a pattern with some high conviction for follow through, right, because it is very bottom heavy, right, and you have conviction on the upside if it's kind of top heavy, right. The volume and price are telling you that you know, this breakout had some oomph behind it. Raindrops turn blue, and a lot of people talk about blue raindrops. So you know, don't get the idea that they're like super directional in nature, but they turn blue when the two VWAPs are the same, right? So when all day long, everybody who bought and sold this on a volume weighted basis paid the same amount, right? Took the same amount roughly for this asset. And that's because the right and left VWAPs are at the same level. And when they're blue, it signals indecision, right? It signals that the market isn't really sure what to do right now. You know, it's like a doji, but a volume weighted doji. And the interesting thing about these is they tend to form before periods of volatility, right? Like even the three that we have in this chart, right? Right after each one of these, something happened and price moved. It didn't just stay flat, right? So we like to look at their placement of where they are to signal which way price will go when it finally breaks out of that kind of indecision zone, right? So like when you simply just look at, you know, the fib levels, the trend lines here, you know, this is one area that might make sense. You know, I don't know. I drew this after this happened, so I don't want to act like this line was there before, right? I just found this chart not long ago. But, you know, the placement of the blue raindrop matters more than its color. So if it forms at the bottom or right after price is kind of reversed a bit, right? You know, that's different than it forming in a trend along the way, where it might be kind of meaningless. But if you see, you know, when form and price starts to pull back a little bit, right, then that's something to pay attention to. And the same thing in the reverse. if you look at this chart, you can see that it happens a lot, right? Like you have two of them down here, and then you had this pop. There was one up here. It bounced around for a bit, went down. You had one here, and it went sideways, right? Had one here, it went up. Another one, it went up. And after this one, at a resistance level, it went down. You can scan for these in Trendspider, which is something that is really interesting. And you can scan for these occurring either, during the time period you're scanning, like once today, or like one has happened in the last few days, right? There's pre-built scanners built into Trendspider that you can use for that. So I don't know how much more time I have here. I don't want to keep rambling.
Well, you are, the final speaker, so
Okay.
not going to put too much of a cap on you. But I mean, we can always go to questions too. But yeah, feel free to go for a few more, and then we can do some Q&A. I might like have people raise their hands if they want to just like ask questions.
Sure, whatever, man. I'm here all night. I got nothing else to do.
Well, I'll say this now. If anybody wants to ask a question, feel free to go ahead and raise your hand. And Dan, I'll have you keep talking for another couple minutes, and then we'll take some questions.
Okay, I'll show you some other cool stuff that I really like to use. So one thing that Jake touched on quite a bit was seasonality. I'm a big fan of it. I like to show it off. Let me pick a different asset though. I like to just highlight its flexibility, because I don't think a lot of people really know just how flexible it is. So obviously you can have it look back at any asset, right? And by the way, no one knows this. I should probably tell people this. If it's full screen, you can just type the name of another asset. You don't have to close it and then go back. If you just type it, it'll let you choose it, right? It actually does the search and recognizes that. But everyone knows you can look at it by like week or month, day or hour, right? So it lets you slice and dice it. And you can configure like when it starts measuring it for. What a lot of people miss is that you can actually filter this pretty granularly, right? So if you want to like exclude like all of 2020 from the data, you just type 2020. You can just type a month like MAR 2015, right? And remove March of 2014. And you can make this list as long as you want, and you can flip it on and off and kind of see the difference, right? Like this is with 2020 and March 2014, and this is this is with it, and that was without it, right? And another thing people often miss about Trendspider's subcharts is that the chart keys are clickable, right? So like I've turned off a bunch of stuff here, but you can actually click on this and see the actual plot distribution of outcomes for a period of time. So you can see like the 28th week of the year, going back the last 10 years in Disney doesn't really lose money, right? And if you're curious what that actually looks like, right, you can see 10 dots, one per each of the years, right? Each of the weeks in the last 10 years to show you what the actual outcome was. So you can get an idea for how it was spread out. And you can also flip on the volatility, right, subchart, which will give you like the min max, right, the total volatility on the outside and the 25th, 75th percentile in the middle. I'm a big fan of seasonality. A lot of people here are. We just see it play out a lot, especially if you're careful about choosing good dates, right, and capturing a lot of data in it. It tends to form something that can be pretty informative. And like one way that I like to use it, I don't like really trade on it specifically directly, but if I want to get into a stock, I'll check the seasonality, because oftentimes stocks perform differently in different days of the week, right? And like sometimes you'll see a stock where it just really underperforms on Tuesdays for whatever reason, right? And that'll be a good chance to get into that name that I otherwise like, right? Because there's a good chance it's going to have a rough day, right? So that's how I use the seasonality tool. I'm a big fan of that. I also like to look at insider transactions, right? I'm a bit of a nerd that way. My favorite example, and people troll me because I post it all the time, is on Facebook, because it's just mind-blowing how much money Zuckerberg has been cashing out. And it's been very consistent. But this is a really cool tool that has a lot of depth to it, right? So like you can sort it by the insider or their employment status, right? Like if they're director, officer, 10% owner, or just Mark, right? And then for every record that it shows, right, you can actually put your mouse over it, and if you click read there, it'll take you to the actual SEC filing for that transaction. So you can get a little more detail if you want to start digging into it. And this works on every symbol, right? So you can look at Chewy, right? Let me spell Chewy. Whatever. There we go. CHWY. Right. You can look at it for Google, right? It's very interesting to me how even on names where in the past there wasn't a ton of insider selling, Chewy's not a great example, but like Google is, right? There is nowadays. You know, I found that to be something that's kind of interesting, you know. So that's one thing that a lot of people kind of glance at and don't really grasp the full depth of it, because you kind of have to actually interact with it a lot to kind of discover what options it has. The other thing that's like that is the analyst ratings, right? And I've given this example before, so, you know, but this is something that I really did find one day when doing exactly this, and it kind of blew my mind. If you look at Tesla, right, and you're looking for an interesting indicator for it, look at Citigroup and Piper Sandler's ratings on it. And the way you do this is you click on events here and you click analyst estimates, and then you'll have it in your chart key, right? And then in this list, you can click on different analyst names and select them. So what I find fascinating here is when I go to only the favorites, which are the ones I have clicked on here, right? And let me take volume off just to get out of the way. Right, we can see just how horrible Citibank is at recommending, you know, actions on Tesla, right? Here at the very, very bottom in COVID, they said sell, right? Here, right when it was swinging up in the middle of a move, they said sell, right? They said sell over here, you know, a year ago, right? While it was consolidating in this monthly range drop here. You know, they keep saying sell and it keeps going up, and it's kind of hilarious to me. It blows my mind. And the thing is, Trendspider makes it really easy to discover stuff like that. So, you know, this is actually one of the reasons we built this in, is so you can just visually use non-technical stuff like analysts, like a technical indicator, right? You can just correlate what it reads to what the price has done. And that gives you a lot of flexibility. So very soon we're adding this to the backtester. So you'll be able to backtest analysts, right? And say, what if I just followed what Citigroup said, right? You know, how would I have done, right? And you can compare that to, you know, other strategies, or just plain buy and hold and never trade out of it. But that's one thing that I think a lot of people miss out on. The other thing that's related to this is, you know, obviously you can turn on splits, dividends, and earnings in the same place as analysts, right? You know, a lot of charting tools put that in a different part in like settings or something. So I like to point that out.
Awesome.
I could ramble for like 4 more hours.
So what I'll say is we have questions in here, and let's go over some questions, like 5 to 10. Maybe we'll just go kind of down the panel. And then I'll let you know if there's panelists want to answer specific questions, you can see them. Jonah, I think that you were looking at them beforehand. Were there any that stood out to you?
I think Jonah had to hop off.
Oh, okay, no worries. He just, I think, left his I guess he left himself signed in. Well, that's fine. So Jake and Dan, you know, there's a lot of questions really about Trendspider and about different areas. Do you want to maybe look through some of these and just maybe even give a shout out to anybody who asked them? And then, like I said, if somebody wants to come up, you can always raise your hand using the raise hand feature. I'm down to allow some people to talk, but yeah, Jake, you can look through and see if there's any you want to throw to yourself or to Dan, and you know, I'll just be here in the corner.
Yeah, I'll just go down the line. Can you show some bearish setups? I posted quite a few on my personal account, but I mean, bearish setups are bearish until they're not. I mean, it's just, you know, if you are looking at setups, I'd definitely look at the weekly chart. What is that one, Dan?
AYX. If you want a bearish setup, it's one of my favorites.
Yeah, that's a nice descending triangle there too. Yeah, so there's one. I mean, the markets in general to me look a little, you know, toppy, but you know, who knows? You just kind of have to take price action as it plays out. Lynette, I think we answered her about the bases. I personally like to use IWM. Honestly, I like to use Bitcoin a lot as an area of kind of just a gauge of risk on and liquidity. So anytime Bitcoins really get hit, I generally will take a note of that. So the fact that Bitcoin's not looking great kind of is in line with my thesis on at least a short-term pullback. You know, it definitely has decoupled a little bit from the markets. I mean, before they were pretty much trading right in tandem, but I think that's changed a little bit. But Bitcoin, IWM, VIX is definitely one I keep an eye on. So for example, I look at VIX a lot to see what's the relationship. Is the S&P 500 up and VIX is down? Is S&P 500 up and VIX is also up? Anytime you have a kind of a, you know, I guess you can call it divergence, where you have, you know, VIX and SPY up, those are supposed to kind of be inverse most of the time. And so that's something I look at a lot. To answer Lynette's question, this was for Jonah about trading rules. I'm not going to answer that one for him. Do you follow a specific group of stocks? I personally do. I really don't trade a lot of different names. I stick within a pretty tight group of stocks. So, you know, for example, if growth stocks looked decent, like into the close, like I follow Fubo very closely. So if I were to take a trade, it'd probably be Fubo as a proxy for growth. And Dan, I'll kind of let you comment on that too. But for me, I stick with a very, very small group of stocks. Now, if you follow us on Twitter, on Trendspider, or you follow, you know, me personally on mine, or Dan, you know, I generally am posting a ton of charts, but that doesn't mean that I'm trading all of them. I'd like to just post charts for everybody to see a different perspective. But with Trendspider, with just my personal situation with the new family member in the family, with Kuba being born, I just don't have time to really actively trade. I'm more of a swing and position trader when I am even doing that. You know, my focus is really building Trendspider as much as we can, and that's what I'm really focused on, and hopefully, you know, helping be a thought leader in the industry to see the markets in a different perspective. So that's why I like to post so many charts, to show people different case studies. So, you know, if I'm just posting 3 or 4 charts, you know, let's say that we want to do a case study on the volume by price or the anchored view app. If I just post 4 charts, that's not a big data source or data set to look at. So that's why I like to post a lot of charts, so you can see that this stuff works across the board, not just for a couple stocks, one or two. But Dan, I'll let you comment on like.
I'm the exact opposite. I'll literally trade anything, and I look at, you know, probably like 300 different charts a day. Right, I'm always prowling charts. Before I go to bed, I spend an hour on my phone looking at charts. So it's a weird addiction and obsession, and it just give me a good setup.
Yeah, it's fair. How do you look for stocks to watch for tomorrow?
I scan. Do you scan?
I was gonna say, I scan on the weekends mostly, like to look for bullish setups on the candles. So I like to look for bullish engulfing candles, like on the weekly chart. I'm kind of a top-down guy. Like, you know, I don't really use the strat, but I look at the market very similar to how those that trade the strat look at it. I like to look at, you know, the full picture. Like, I'm not going to go trade a daily chart if the weekly candle looks like crap, or I'm not going to go swing a position if we're getting into the end of the month and the monthly candle looks like crap. So, you know, I'm generally not really looking at an overnight trade or like a day trade. That I don't have time for it. That's not really my personality. I'm more of a swing trader. As I mentioned, when I do trade, I just try to kind of not have my whole life just around the market. So a lot of charts, a lot of analysis, a lot of case studies, and then, you know, trading when I can and when it makes sense.
What's that?
Dan, yeah. So Dan said he scans. Sorry, let's see. Can you screen by the RSI Bollinger Band?
Yes. You can, absolutely. I do it all the time. In fact, this scanner, which is how I found Big C, was looking for that, right? This last condition down here is actually looking for the band, RSI to be outside of the band on the lower end. That's one of the things I do a lot, actually.
And if you want to, Dan, if you have that scan, could you throw it in the chat?
Yes, I can.
in case anyone's interested in checking it out. Holy crap, it just lightning like crazy outside. Sorry. Other than
So
what we
Jacob asked, just had a question, said, hey, Dan, so I saw that one. Just had a question about what you say lacking in the current tools available to traders that maybe want to start Trendspider, not technical. Yeah, I'll answer that question. So I think a lot of people, so I came from the enterprise tech world, right? And what we did was we took things that were manual, tedious, and prone to errors, and automated them, right? And when I got into technical analysis, I started looking for ways to automate, the grunt work, right? The staring at charts, right? The having to have a ton of different charts open all the time. It was very hard for me. Like, I have serious ADD, right? I'm all over the place. And it's very hard for me to like pay attention to like a whole wall of charts, and that's what it ended up, right? Like, I have 5 monitors, they were all covered in charts, and I was missing things and having a hard time. And, my analysis was suffering because my brain was so fried from staring at them all day, right? So I started looking for something that could automate some of that, bullshit, right? The stuff that is tedious, manual, and error prone, right? Just like we did with deploying servers and things like that. So, that's kind of what inspired me, because there was nothing out there that does it, and there still isn't, right? Besides us. And, it's actually a very tough challenge to solve, because it's very math intensive, and, you're dealing with people's essentially money. I mean, indirectly, but people do make decisions based on stuff they do in Trendspider. So, it's been a very different project for us. And, we've tried very hard to be meticulous about that kind of stuff, right? Does that answer the question? I think that answers the question.
Absolutely. Any other pressing questions you guys saw that you want to go over?
I would say the alerts. Dan, if you can touch on the alerts.
Be glad to. I use alerts pretty heavily. So in Trendspider, there's 2 different types of alerts, right? I'll delete the one and recreate it that I have here, right? One is what we call a dynamic price alert. That's when you right click on something on your chart. It can be a ray, it can be a horizontal level, it can be a fib level, it can be an indicator, it can be a multi-time frame indicator, right? It can be there on its own or something that you put there, but you right click it and you go to create an alert. And this allows you to create alerts that are designed to respond to price in a way that is similar to how you would if you were watching the chart, right? So, like if you were a trader watching a chart, something breaks, you might not immediately react to it. You don't want to get wicked out, right? That bar, might have just started forming, and it may turn into a giant wick, and you might be fine, right? You may watch it on a different time frame than the time frame that you charted it on. So Trendspider attempts to abstract that away, right? And it's a tough challenge, because how do you tell a computer how to be a little fuzzy about it? Because like if I'm watching a line and price is coming near and it comes close to it, but it doesn't quite touch it, and then it bounces and keeps going, to me that's a bounce, right? The level may be slightly imprecise, maybe due to my human error and where I placed that level, but that's still a bounce to me. So what this lets you do is express all of that in one alert, right? So I right click on this anchored VWAP, and now I can tell it what to look for, right? If I'm bearish about it, or worried that it might go against me, I can make it a breakthrough alert, right? If I think it might bounce, I can do a touch alert, or I'm sorry, a bounce alert. And if I think it might just touch that level and then kind of hang out somewhere around there, I can do a touch alert, right? Or I can do all 3, right? So you can choose whatever combination of these you want. And then pay attention to the descriptions when you're doing this, because if you then go change the sensitivity zone all the way down to 0, the descriptions will change, because the behavior of the alert will change if there's a sensitivity zone or not. For example, a breakthrough needs to break through this whole area in that single candle, right? If you have a sensitivity on it. But a touch is like a proximity alarm. It's like price coming near it. So, if you're creating these alerts, just know there's some nuance to how they work. And that gives you a lot of control over having it respond in a way that will reflect kind of how you would respond, right at the time you would. And it also keeps a lot of noise out of your face, right? You're not going to have to listen to, you know, constant alerts going off with it bouncing around in an area, right? Unless it completes the action that you want it to do. Next thing you can do here is you can then set this alert to trigger off a different time frame, right? So I'm on a daily chart, but I want to get an alert intraday when this happens. So I may go and select a 10-minute alert time frame. What that'll do is wait for a 10-minute range drop, because I'm on a range drop chart, to complete my condition and close before it sends me the notification. And that way, if it's just a wick or something that, you know, doesn't actually trigger my conditions on close, it won't bug me about it. Then finally, you can give it a name if you want. I usually use the default ones. There's some funny ones the system will throw at you sometimes. And I also like to set my alerts for a long time, right? And Trendspider lets you do that, right? So depending on your plan, you can go, I think it's like 30, 60 or something. But you can set the alert to watch this for a while, right? Because it might not happen today or tomorrow. You don't know really when it'll happen. And if it's something like you're playing like 2 Bollinger Bands or a channel of some kind, you can set these alerts to go off multiple times. So you can set one alert that will kind of give you ping pong bounces, right? Each time price gets near one or the other edge of the range. And then, all you do is create the alert. I'm using this alert as a risk alert. I'm planning to possibly trade this tomorrow, so I'm just setting the chart up for it, right? And this is something that I always do when I plan my trades, is I always create my first alert is, if it's something I'm going to buy pretty soon, is my risk alert, right? To let me know if I'm going to be wrong. So that's one type of alert. The other type of alert, I'm not going to spend a ton of time on because it's like a 2-hour-long topic, but that's called a multi-factor alert, and these can get complicated, right? Like you can have all kinds of mixed conditions in here, and these conditions can span multiple time frames, right? And you can compare things in very interesting ways, and they have all the same options as well.
Yeah, that's really nice for candlestick patterns, lower indicators. It kind of allows you to create your own visual algorithm without having to do any coding. That's the really nice thing about multi-factor alerts and the scanner and the back tester. You don't have to know how to code. You just simply need to know the conditions that you're looking for. And that's kind of how, the retail trader can get an edge. A lot of the time, a lot of these platforms allow you to look for these conditions, but you have to know how to code it in some type of coding language. And if you're just learning how to trade and you just found a condition, you're probably not going to want to have to go learn coding as well. So that's something that we tried to make very easy for someone to create an alert without having to have that base knowledge.
Yeah, it's completely codeless. That's something we're pretty proud of because we did that without giving up flexibility. Basically anything you can write, code yourself to do this can do through, pretty straightforward language. And if you know how to trade, you know how to speak to it because it's simply it's using the same terminology in the same way. So, pretty stoked about the possibilities of that, because we can take that ultimately and do some pretty interesting things.
Awesome. I think I'm going to wrap it up. If that's cool with you guys.
Yeah.
Awesome. Yeah. Well, first off, I think, if you're still here, appreciate everyone. If you, appreciated Jake and Dan, feel free to let them know in the message section. Big thanks to them for coming out, taking time out of their days, educating, not, getting paid to do this or to be here, but just wanted to come and give, so yes, please everybody give thanks to them. They're really, really awesome. And make sure that you're following both of them on Twitter as well as the Trendspider account. Jake, he's growing fast on there. I think he's up like 10,000 followers a month because he's posting really quality content, consistent charts and explanations, responds to people. So it's a pleasure, being able to collaborate. And I'm looking forward to the next time we do this. And I'm sure that they'll be on more spaces as well. In addition, looking forward to being able to actually meet you guys down in Orlando. If you're interested in, actually meeting us, we'll be posting myself. I'll be posting some on it. Jonah will be posting some on it. This conference that'll be going on in Orlando down in October 10th. That's the Columbus Day weekend. Real quick before we wrap up, just I would say like 1 to 2 minutes. Jake, you got anything else you want to add?
Yeah, no, just everyone, thanks for joining. I know this was quite a while. So for those 65 people still on here, I definitely thank you guys for staying the whole time. That was definitely a long session, but hopefully it was helpful. Hopefully it was informative. hopefully you guys learned a little more on the technical side and not just, all about Trendspider. There's a lot of things that we talked about that Trendspider has, but, the base knowledge is really important before you do go use the tool. So, we're always posting content. If you guys do want to have access to some of that educational content, just go to YouTube, type in Trendspider Technical Analysis Series. You'll be able to check out all of those different videos there. I think there's like 26 or 27 now. And you can always send us a Twitter DM. Our DMs are open and we're happy to answer any questions. WF25 is the 25% coupon code if anyone's interested in checking that out. That's for any plan, and that's also with the 7-day free trial. So you do have the 7-day free trial first, and then after that, you would have to pay. So if you need a little more time, we can always extend that trial. So just keep in mind that we want to make sure that you're comfortable with the product before you go and buy it, and make sure that it's something that you would utilize. So yeah, thank you everybody. Really appreciate everybody's time. And just to quickly mention, what differentiates Trendspider from other tools out there. There's a ton. And honestly, a big part of our product is the service side. We have a customer success team. If you have a question, we're going to answer it. There's a lot of platforms out there that really don't have a customer service even department. It's kind of like, okay, you bought it, in good luck with that. So we're really there to make sure you're going to be successful using the platform. We have a lot of different ways that we do that through our customer success team, through our telephone line that you can call at any time with a question. So we're definitely there to make sure that you are set up for success using the platform.
It's the truth.
Real quick, I will say, can absolutely testify. I took advantage of that customer success team. I had a one-on-one with Jason Krutsky. So great. Honestly, I really like my usage of the platform significantly increased following that. I felt, really overwhelmed, like coming in, and then Jason was able to walk me through trend lines, anchored VWAP, creating charts that looked good and that I was comfortable posting to my social medias and using for, my personal research. And, I can't wait to get in another one of those one-on-ones and, study through more of that stuff. And this kind of here was almost kind of like a one-on-one for me. So really, really can testify to the value of those. So thank you, Jake. Dan.
Just want to say thanks to everyone for being here. It's been a long night. I hope you guys learned something and, find the product useful. And I'm always there if someone has an idea or a complaint or a suggestion or a thought, right? Just DM me. My DMs are open, right? And I check them obsessively. So, I love hearing from people, especially users, people who use the product, because that's one of the ways we improve it. Most of the stuff in there is stuff that came up from suggestions from customers, right? Traders who use it. They're like, I wish I could do this. And we're like, maybe we can do that. So, with that, just thank you, Wolf, for putting it on. I really appreciate it.
Absolutely a pleasure. This is the stuff that I live for. My goal in life is just to bring together the best so that we can all learn from them as a community. And for anybody that wants to check out, I have an app as well. We're not currently on web, but we hopefully will be. It's called Wolf Financial. You can download it from the App Store or the Play Store. And it's a place for investors to come together and communicate and do research and to hopefully long-term or not too far out, be able to trade as well. So really hope everyone has a fantastic night. This recording, I'm going to end it here.